Okay, good morning, everyone. You're welcome to today's episode of the Market Snapshot. My name is Norbert Kiza, and I'm happy to be with you all today. So, for today, we are going to go through basically what's happening in the market, and of course, to see what moves we can expect within the course of today. So, generally, looking at how the markets are looking like at the moment, we are seeing that there is still a lot of risk on sentiment in the market. We have seen quite a number of things moving higher since last week. If you look at the commodities, most of them are actually in strong buying momentum. Things like gold, we are seeing gold currently at an all-time high, and it's still making new fresh highs. Silver, again, also not so far behind, and also looks like we should see more highs to come in from there. Crossing over to the forex market, we're also seeing some risk on for a number of currencies like the euro, the pound. Those are also making steady move to the upside. The euro dollar is also going to be in the spotlight tomorrow as we have the ECB press conference. So if we get some indications of when they are going to cut rates, we should see some reaction there, possibly to the upside for the euro. Pound also is steadily moving higher as the inflation has also been not increasing at a very strong pace, which of course is good for the economy. And I suspect that is also affecting the pound positively. Crossing over to see the indices again have also been making new highs. We have all-time highs so far at the moment on the Dow Jones. Nasdaq is also currently slightly below its all-time high on the cash CFD index, and we should expect more upside there. The euro indices, however, are not really moving like the US counterparts. We are seeing some bit of weakness there. Again, I'm expecting that when the earnings kick in for a number of these heavy weights or the mega cap in these indices, then we should see some recovery possibly to the upside on these particular indices. Now, looking quickly at before we go to the calendar, I just want to talk about United Health. So United Health released earnings yesterday, and United Health is one of the biggest components within the US 30 roll or the cash index with FX Pesa. And we actually saw that the United Health is what pushed the Dow Jones to go above 41,000. We actually saw that the Dow Jones, made fresh new highs, all-time highs, on the back of relatively strong earnings that we got from United Health. So, looking briefly at some of the earnings we got from here, we saw that the earnings that were released yesterday, which is the 16th of July, we saw that there was a bit on the earnings per share, which came in at $6.8. And you saw this was above the forecast of 6.65. But if you look at the EPS year over year change, we have been seeing a steady increase every other year. And of course, this is good for the stock. Looking at other things, again, if you look at the technical analysis will show you that it's actually a strong buy at the moment, and we should potentially see more steady upside coming in for some of these particular companies. So, what is pushing the Dow Jones higher is financials, and of course, some of their consumer staples are also helping it to see higher levels. Okay, so let's quickly look at the economic calendar to see what we have today, and then we shall go over a few other things. Now, today is Wednesday, the 17th of July, and we have quite a number of events that are currently affecting the markets. And of course, looking at the Asia session that was earlier this morning, we saw a slight drop on the CPI year over year, from 4% to 3.3% for the New Zealand dollar. Going into the London session, we saw that pound CPI came in lower, of course, and we also saw that there was a slight hold there on CPI year over year, which of course I believe is the reason why we are seeing the pound reacting higher for the pound. Now, the pound is still trading relatively below current below highs that we expect from January. So I'm expecting that we should see the pound possibly moving higher and higher towards this level we had around 1.3034, which we had in 2023. And I'm expecting that more strong strength of the pound, the UK economy, will allow the pound to possibly visit higher levels. Now, going later into the course of the day, we have quite a bit of data. Again, we have the CPI data coming out there from the Eurozone. We have some data coming out there for Europe, which is the CPI. If we see a relatively strong CPI, that's going to be positive for the euro, and we should see it steadily moving higher. Going into the US session, we also have building permits data, which is going to be released at 3:30. If we get higher readings there, I think that's going to be positive for the dollar, and we should see some more strength coming out there for this particular asset. Now, going into later into the US session at 5:30, we have some data coming out for crude oil. We have the crude oil inventories. If you look at the price for oil, we've been seeing actually a steady price for oil. It's been holding quite nicely at $80 a barrel. Brent crude, again, also Brent oil rather, also trading around $83, $84 a barrel, looking steady there, I guess, on the back of demand. But also on the back of some bit of resilience there in the US economy. So we should see, if we see higher inventories numbers, that could possibly be bearish for the crude oil. But if we see higher inventory numbers, rather, if we see lower inventory numbers, that's going to be bullish for crude oil. And if we see higher inventory numbers, then we should see some bearishness for the crude oil. Now, I just want us to quickly look through this media report for gold. I'm sure most of you must be wondering what has been, pushing gold to the upside. So I just want us to quickly go through some of the key points that could be, some of the key catalysts that could be pushing gold, over the next few months, and where we could possibly see gold moving. So gold has been performing quite nicely in 2024. We've been seeing that actually gold has posted about 12% year-to-date return, which has outpaced major asset classes. And again, we are seeing a number of central banks buying gold, not only the People's Republic of China central bank. We have also seen a number of banks, even in Africa, like Zimbabwe, also buying up gold to try and boost their reserves, which are currently around $370 million. Bank of Uganda also has indicated that they are going to look into purchasing gold as an alternative investment so that they can boost their current reserves. So we should see more exposure into gold that could possibly see gold moving higher. Now, in addition to that, there are a few other things that are also affecting gold, like the rate cuts. We are currently in a year where a number of central banks are cutting rates all over the world. It's not only the US that has indicated that they want to cut rates, but we have a number of banks, like the Swiss National Bank has indicated they want to cut rates. Bank of England has also mentioned that they should be cutting rates very, very soon. So all these factors are, I think, are really catalysts that are affecting gold. And again, as you can see, it's an asset that has been performing well year to date. So looking at the gold price, you can see basically how it's been doing. Currently, gold is trading at 2,476. Okay, and it looks like it's aiming for $2,500. Okay, and all those factors are playing a part in that move higher. Now, as you know, one of the reasons that pushes retail to gold is also to hedge against increasing inflation. When prices increase, consumers will have to spend more, or they will need to get more income for them to maintain current expenditure. So, if you're exposing yourself to income-bearing assets like gold and a few other things, you're increasing your income, which can allow you to keep the pace of inflation. So I think all those are really playing a factor in gold. Technically, of course, gold is in a strong uptrend, but we should potentially see gold possibly visiting higher levels as we go along. We have here a chart that is showing previous gold highs that have coincided with strong Western flow, suggesting that the gold market is not yet saturated, simply meaning that demand has not yet kicked in for gold. And once that demand kicks in, then we should also see possibly higher levels for gold. Now, I also found this a bit interesting, but the World Gold Council has actually gotten Idris Elba, who I believe most of you know is a movie celebrity. He's acted in a lot of movies, and Idris Elba made a documentary about gold. That was actually sometime last year, around October. So he talks about gold and why it's a good asset. So could be maybe that is also affecting when in terms of sentiment wise. People are looking towards gold as a possible, hedge for their investments. Now, there's something here on recession risk. So they're saying that while a recession remains a low probability in the immediate term, the global economy is not firing on all pistons. And with inflation above target, central banks are not yet ready to cut rates more aggressively just yet. There also seems to be some complacency in the financial markets. Global stocks are doing well overall, with US stocks or a subset thereof leading the pack, and volatility is near 30-year lows. Yet, historically, there's a strong relationship between the strength of manufacturing and company earnings, and at present, manufacturing shows signs of slowing. So again, all these factors are playing a part in exposure to gold. Now, of course, the other thing that is also playing a big part is geopolitics. And again, you also saw recently that we saw, the political uncertainty that has also come into play in the US. All those, I think, with the elections coming up in the US, we are going to focus to see essentially how that feeds into the price. But we've been having so many things. We had the Iraq, this was in 2002. We had Russia, Ukraine, that was in 2022. And then, of course, we have Israel, Hamas, which is not currently a tail risk or a big catalyst for gold movement. But I think if you look at inflation, I think that is currently what is the current tail risk for markets generally. So there isn't fear. That's why if you check the sentiment, most most of what's moving gold now is not really fear. Yes, risk still, geopolitical tensions still stay as a risk factor, but they are not really what is pushing gold up. What is really pushing gold up is actually the demand for gold. Yeah. So you go through this. You can find this on World Gold Council. There's quite a lot here. I don't want to dwell too much on it because there's quite a lot to go through. But all this is playing a part, in gold. So when you look at this table, it's showing you economic scenario, opportunity risk, economic expansion, momentum, risk, and uncertainty, and how all that plays a factor in gold. So you can go through it and then see. Now, for those of you that are trading the Nasdaq, tomorrow we have Netflix earnings. They're going to be released after the bell. That's on Thursday, and this is going to play a really, really big factor in how we shall see the movements there for the Nasdaq. So Nasdaq has had a hard time breaking above its high on the cash CFD of 20,700. It has not broken above there, and I believe the Netflix earnings are really going to play a part. Netflix earnings they have been reporting relatively strong earnings. They have really strong subscribers. Subscriber growth has been looking good. They have also cracked down on passwords. We've been saying that Netflix is going to, partner with some big companies like there's the company that owns WWE. I'm forgetting what it's called, but they want to partner with them so that they can bring the WWE matches to Netflix subscribers in the early part of next year. So I think all that is going to play a fact. So if we see a big jump on the Netflix price, then I think we are going to see a really, really big jump on things like Nasdaq. Awesome. Let's cross over to the MT5 charts and see what's happening on the charts. Okay, so let's cross to MT5. If you have any questions, guys, um, you can share your questions, and I'll be able to come back to them in a moment. Wait. All right. Okay. All right. So we're going to start with USDJPY, which currently has a very, very nice setup for today. USDJPY We had an intervention from the Bank of Japan. That was on the day that we had the CPI. If you all recall, a number of traders raised a few questions as to why we saw we saw that the JPY pairs were selling on the day we had CPI. So the only pair that we expected to sell was USD JPY, and the reason why we expected it to sell was because of the low CPI print that was released from the US. But despite that, we saw that the CPI, we saw a sell on GPP JPY, we saw a sell, USD JPY, Euro JPY. Now, the Bank of Japan came out and said they intervened. Okay. And we saw how the market reacted to that. So currently, retail traders have cut back on their long positions for the JPY pairs, and we should see a bit of a pullback going into taking us at least a healthy pullback, taking us back to May lows, somewhere closer to 156, possibly to 155. Now, the reason why I'm focusing more on USD JPY is simply because once the Fed starts cutting rates, the JPY pair that's going to take a hit first is going to be this one here. Okay, because the Fed the rate cuts are going to weaken the dollar, which will then allow the JPY to benefit in that regard. I'm also seeing a few comments that have come out from Japan's currency diplomat, is called Kanda. He's saying here that if speculators cause excessive moves in the FX market, we have no choice but to respond appropriately. So right now, I think the yen is on a spotlight. So we should see more action from the Bank of Japan, possibly weakening the yen, strengthening the yen back to some of these key levels there. So this, I would say, is one of the good trades possibly you can look into. We have two bearish flags there. We have one here, we have another one here. You know, we failed to sustain that 50% Fibonacci level of 159. We tested it just briefly, and then immediately we saw a sharp sell. So I think that downside momentum is currently quite strong. Now, going over to gold, gold I believe has been a fairly, say a fairly easy asset to trade. If you've really been looking at, if you're a price action trader, I don't think gold has really been a struggle, simply because gold is looking extremely bullish at the moment, and it's currently trading above its high that it had. It created this high around May. So I would say the only logical thing, especially if you're someone who follows technicals, would be that if you attempt to reach a previous high and you have a very big imbalance candle like this that you had on the H4 time frame, very nice break above it, indicating signs of strong upside momentum. Now, again, also on the technical side, if you look at gold on the H4 time frame, we had a golden cross, the 50-day crossed above the 200-day. That happened at this price here of 2,334. So soon after we saw the golden cross, gold launched a very, very sharp movement to the upside, which is currently active. Now, fundamentally also, the lower CPI print and those indications of rate cuts from the Fed is really pushing gold higher. And again, I'm thinking gold may tap out soon for us to see as retracement, possibly back below the previous high of 2,447. But at the meantime, you might want to have, you can maybe look at setting your sell stops possibly below 2,450, just in case gold retraces back to the previous high. And again, if it does not, then expect gold to possibly see a higher move, possibly taking us to 2,500. Now, when I look at silver and how silver is performing today, I get some kind of indication that maybe gold may not really stay up for too long. Okay, so it might start retracing soon. Silver is down about 0.9%. It also has not broken its previous all-time high, which is somewhere around $32 an ounce. So all those are indicating towards weekend, some bit of complacency that may kick into gold that would allow gold at least to retrace. So if I add my levels here, I'm thinking that the levels to watch for gold is going to be our previous high, which is around that golden cross level. That's 2,447. Now, the other one to watch is going to be 2,438. Those are the levels that you would be looking for a potential entry for a sell stop. Okay, and for sellers, as long as you have price action above the previous high, gold will soon enough possibly retrace below it. But for now, stay conscious. You can maybe use a trailing stop, set it maybe at 20-30 pips just in case gold continues buying. That's if you're selling. Now, for the Nasdaq again, the main focus for the Nasdaq today is going to be the earnings that we have for Netflix. You can see that there is some hesitation for Nasdaq. That is on the 4-hour time frame. We saw that the Nasdaq actually failed to take out these levels here to move to the upside. There was some bit of hesitation here, and not only that, but you can see again, if you're a price action trader, we tend to focus on the liquidity sweeps. You can see the liquidity sweeps that the Nasdaq had around here, indicating that the buyers were really, really losing out on, on that steam. So if Netflix earnings disappoint, and of course, if we get forward guidance where Netflix is expecting a weak Q3, which we are currently in, then I believe that will allow the Nasdaq to possibly sell. Now, I can say for certain, because I trade the indices quite often. I trade indices, and I can say that typically when it comes to seasonality of these indices, um, you find typically that some stocks may usually, even when you have good guidance, some stocks tend to sell the index around earnings periods. Like Netflix sometimes its earnings are not too impressive. If it does not really give us strong guidance, normally Nasdaq will sell. So you find that Apple is normally the lifesaver for Nasdaq. So and Apple's earnings are not until 1st of August, right? So we tend to see some bit of a sell going into end of July, and then of course a buy going into 1st of August. So we should see Nasdaq possibly selling towards these areas soon enough. We should see it possibly coming and testing some of these levels sometime within the month before it then recovers to move higher. But at the moment, I would be looking for a sell for the Nasdaq. As you can see that the sell momentum is very, very strong, and it's only healthy that it comes and makes a retracement back to these points, possibly towards these levels ahead of the Netflix earnings. Now, looking at US 30, I think US 30 we talked about buying it the last time we met. If you guys recall, we said that if we break above that 39,600 barrier, there would be looking for a buy. We broke above it quite nicely, and you can see at the moment we are currently trading above 40,000. And not only that, but we are also trading above, we're trading in record levels at the moment, guys. We are now making historical highs on the Dow Jones on the back of strong earnings from United Health and some of the financials like Goldman Sachs, BlackRock. All those banks reported very, very strong earnings that is propelling this index all the way to the upside. Now, it's only it's only fair that we see a bit of a retracement from these levels here, possibly going into US session. We should potentially see a retracement back to some of these levels before we see a move to the upside. So the pullback definitely has to happen. We should see a pullback possibly to 40,500, possibly maybe 40,400 before we see it testing newer highs. So I might want to be too careful not to buy at record highs. I might want to be a bit careful not to buy at record highs. You could buy, but maintain a tight stop just in case the market retraces back. You don't get stuck there, and you end up getting stuck in your trade over there. Now, crossing over to Euro USD. Euro USD again, we looked at buying it. That was from the major part of last week. I think Euro USD buys have been the trade. We've been seeing a very nice buy of this confluence support of 1.06482. We got into this zone. The buy even got even stronger, and of course, we broke out of this range that was on a 4-hour time frame quite nicely. We saw the market, propelling to the upside. So I'm still bullish on Euro USD. However, the party may come to an end around the time when we have the ECB conference tomorrow. where we could expect some comments on rate cuts. So if we get some comments that are going to be cutting rates soon, then we should see the euro dollar retracing from those points and possibly reversing to sell. All right. I think that's it from me. Guys, if you have any questions, now may be the time for you guys to send in your questions so that we can go over them. Question time now, guys. All right. Questions? And let's maybe go through some questions here. Patrick, how are you doing? I hope you're doing awesome. Patrick, you're saying, hi, Norbert. Uh, what is leading the sell-off in S&P, and can we expect it to recover in the course of the day? Again, why is it unable to move consistently upwards like it was the case before Thursday last week? There are several factors that affect the price action on S&P 500. Again, some of the big components under the S&P are Nvidia and Apple. So possibly maybe Apple did not have that much of a good day yesterday. That could have possibly dragged it to the downside. And again, we're in earnings season. So earnings season expect a bit of inconsistent price action. Um, um, S&P 500 has been posting record gains every other day. It's been clinching new record highs over and over and over and over again. And of course, I'm expecting that we should see some possible weakness to come in and to kick in soon enough to possibly weaken it to the downside. So, what I can say is you might want to put your fib levels here. You can set your fib levels here possibly at the top, which is the swing low here, and of course maybe put it at the most recent support, which is somewhere around there. So you can clearly see here that at least we should get some retracement coming in there for the S&P 500. This retracement is possibly could give us a retracement of 4% down to this level. And again, if we don't get a retracement down here, we should at least get one to these levels here. That's the 61.8% retracement point. And of course, we have the 50% there. So any of these levels is very, very likely for us to possibly test over the next few days. I hope you're seeing my chart. That was Wangari Patrick. I hope you're seeing my chart on the S&P 500. So we are seeing those are the levels that you can expect for S&P 500. Okay, we can expect possibly for it to come test this level here. Again, if it doesn't test this level, we should then possibly see it coming to test this level down here. If it keeps selling, then of course we should see a potential sell into this level here, which is somewhere around there. All right. So Wangari Patrick, I hope that helps. All right. Next question we are saying, if Netflix beats the earnings expectations and revenue, but a negative forward guidance, I think it will sell. Uh, I, I wouldn't particularly call it a negative forward guidance. Forward guidance really at times it depends really on the perception. We there have to be drivers for revenue, and of course we have the free cash flow that keeps coming in, and of course we also have we have several other things that could possibly impede earnings or possibly increase the earnings. So the main focus for Netflix is going to be whether we are seeing a steady increase on subscriber growth, because that is the core revenue component for Netflix. Then of course we are going to be seeing how they are possibly whether they are looking at possibly building a business for the future, and of course if we have maybe any new comments on partnerships or anything like that that could boost a business. So if we don't see any reaction to that, then it will just be a technical reaction on a Nasdaq, and we should possibly see it selling. I hope that helps, Joseph. Next question. Kindly assist me with the best MACD and RSI settings. I don't use RSI and MACD, but what I can say is that if you're adding it onto your chart, I think it's quite simple. when you're using RSI and MACD, you're supposed to use it to benefit from what we call divergence. Okay, so for instance, when I come and add my RSI, I don't recall where RSI is exactly. Mm, let me go to a new chart. Indicators. RSI is in what? Is it in custom? Okay, so this is the RSI. So now RSI, it's just simple. You use it as a divergence tool. So divergence in a sense that if the RSI makes, if maybe for instance, the price moves like this, okay? This is how your price action is moving. If the price does this, okay? If it does this, and then your RSI does this, okay? Your RSI does this, it could mean that in that case, your price is divergent because you have bearish divergence where price is moving higher, but your RSI is moving lower. So now in that case, what you should do, you should be looking to sell. Okay, so that's how you use the RSI. Many traders just simply put the RSI and they say if it's above 70 I sell, if it's below 30 I buy. Guys, that is extremely a very wrong way to use your RSI because sometimes you'll find it breaking above 70 and it keeps buying. For instance, like I can show you, the RSI was above 70 here, but it kept buying. Okay, it kept buying. So you need to be careful when you're using it. If you use it, especially if you're someone who is doing scalping, you need to be very careful because the RSI can keep making higher levels even when it's selling. So you use it as a divergence tool. Okay, awesome. Do you have any other questions? Any other questions? All right. Just to speak briefly about the Kampala takeover, for those of you that are joining in from Kampala, I want to tell you guys about events that we have planned for you guys this week from Thursday to Saturday. On Thursday, we have a live trading event which is going to be happening tomorrow at the FX Space Academy. That is at Rumi Building, 7th floor along Lumumba Avenue. Make sure you do not miss it. Um, then we also have another live trading event happening on Friday. We're going to be trading the Canada retail sales. Make sure you also do not miss that particular trading event. On Saturday, we have the Kampala Pips and Branch. We are going to be going over the markets in Q2. And of course, we have a lot to discuss on Saturday, guys. We have giveaways. We have a lot of traders, top traders in Kampala that are going to be around for the event. Make sure you come and network with them, engage with them, and get more information about the markets from them. Check for information in the description below. You have the sign up link there, the registration link there, so you can register for the event and we can see you there. If you're new to trading, we have a lot of resources on YouTube where you can watch and get to learn how to trade and benefit from trading. So, okay, awesome. It's okay. Yeah. Otherwise, that's it from me, guys. I wish you all an amazing trading day and we talk soon. Cheers, guys, and happy trading.